let's dive deeper into the action with the markets reporters. Abigail, what are you watching at the close?
Caroline, I'm thinking about the technicals on that tech-heavy Nasdaq that really came under pressure today. Lots going on here. This is a roughly 1.5-year chart, and you can see mainly whipsaws. It's a range, although the complete range isn't here. Back in 2018, we had the last bit of the rally and then the fourth quarter volatility. What I'd like to point out, Taylor was talking about this not so long ago, the fact that the Nasdaq is tried to touch down onto its 100-day moving average in yellow. You can see when that's happened before. The last time that happened, just zigzagging there. The time before that going down to the 200-day moving average. It's tough to know what is going to happen here. So much uncertainty. The bigger point to make around this chart, though, is the fact that we have now had these all-time highs rejected for yet another time. So these buyers are not very enthusiastic. This, as the RSI, or the momentum indicator, is rounding down, it may just suggest we could be stuck in sideways for a bit longer for stocks. Taylor.
Well, Abigail, as you talk about that risk-off sentiment, certainly you see that showing up the sell-off in the Nasdaq into buying bonds. I'm taking a look here at the 10-year yield. It is down now about 9 basis points to a 164. We are waiting, of course, that press conference from Nancy Pelosi announcing a formal inquiry into the impeachment of Trump. So the markets here starting to get a little bit nervous about what this means. Now, I want to take a look here at another chart because, as you know, when we look at the 10-year, we can't do that without also talking about the yield curve inversion. This is the one-day move on the 3-month 10-year, which is the Fed's preferred gauge, down now 12 basis points. We are inverted by 28 basis points. So we've jumped by, almost double really here today alone. And we do know that after an inversion, typically you get a really quick re-steepening and then a recession hits. To be clear, we're not there yet, but that inverted at negative 28 basis points certainly catches my attention. Pranita?
Thank you, Taylor. I'm looking at GLD. That's the largest ETF tracking the price of gold. Investors have been rushing into this fund recently. And if we take a look at a chart of the flows, we'll see that investors added about $1 billion to the fund last week. And so far this week have already added another $700 million. This fund is typically seen as a safe haven. Investors rush into it during times of turbulence, which means that we could certainly continue to see more inflows following today's market sell-off.